What's up everyone, Mike Huddie here. I've been getting a lot of requests lately to produce a video lesson and give you guys an update as to what I've been doing. Recently I joined the SteadyTrade team with Tim Bowen, and we've been giving weekly webinars every week. So if you guys want webinars from me and or Tim Bowen, you gotta get in the SteadyTrade team. I give webinars every Friday after close, and Bowen gives like 2 webinars every day. So it's just jam-packed with education and information you need to become that consistent trader that you dream of becoming. In this video lesson that you're about to watch, you're gonna see a number of things that I go over. I go over position management, risk management, and how to scale into a play. Something that I've been working on diligently for 2.5 years and think I finally cracked the code. So I'm really excited for you guys to learn more about Project 1K Risk and how I've been keeping myself accountable and progressing with slowly inching my risk up and increasing my size. I find that increasing size is a very tough thing to do. Most novice traders have no idea how to do it. And so hopefully this video lesson gives you insight into how that I've been treating such a touchy subject matter. Within the video lesson, I'm gonna go over all the plays we've seen since COVID started. You guys are seeing what I'm trading. You guys are seeing what I'm long overnight, how I handled the week and how I handled the past couple weeks. And I give updates and we review plays and etc., things like that. This last week I made $8,000 buying an OTC breakout into close. And so at the end of this video lesson, you're gonna get insights into why and how I treated handling that position, sizing in, and then what my expectations were coming into today and how I actually made that $8,000. So definitely give this video lesson a watch.
So today we're going to be talking a lot about position management. Risk management, and sizing into a trade. So a little bit of an advanced topic for the people that are new, but just definitely, regardless, position management, whether you're new or not, that's not the advanced part. But sizing in, that can be taken as an advanced skill set. But it's good to know. Way in the beginning, a lot of these successful traders are not just gunslinging and just throwing in size wherever we feel dandy. There's a lot of risk-reward ratios going off in our head at once that we need to keep in mind at all times. So that's just a little preview of what we're going to be going into today. There's so many charts on my screen, you should see it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I have like 16 charts up. And I'm trying to just put them in order for us so that we can just go knocking them through. And you'll see what I mean in a sec. So just bear with me. Promise no one's going to be disappointed. For the most part, I'm not going to be reading the chat today, so don't expect me to read your comments and respond. Got enough on the plate today to get us well through 30 minutes to an hour. So deck in. Epics. All right. After this week, since I got my camera and my microphone up, I'll get my face on the screen. Hopefully the sound quality is coming in a bit better. In the last 2 weeks, my friends stole my camera and my recorder, so my voice was definitely a little echoey for the last 2. But I hope it's better for this one because this is going to be a good webinar. And we're going to get started here in just a sec. I just need to figure out which chart I want first. All right, so my screen's gonna be blank on purpose for the moment. A little background about where I want to take this webinar and what's going on through my head. It's been a while since I've given a global update about position management. I started something back in March called Project 1K Risk. And I'm starting to progress Project 1K Risk to Project 2K Risk. And I want to go over the genesis of what Project 1K Risk was. I found that in the beginning, hang on. Yeah, I want to go over the genesis of Project 1K Risk and then why I'm moving it up to 2K Risk. So Project 1K Risk was the idea that whenever I got into a trade, if I was going to be wrong, I was going to lose $1,000. Okay, Project 1K Risk. It was a set risk idea in mind where every trade that I thought was my A+ ideal bread and butter setup, I was going to lose $1,000 if it didn't work out. And hopefully I'm dealing with a setup that is better than 50-50 odds, and more often than not it'll work out, and hopefully the risk reward is better than 1-to-1 so that it becomes a profitable equation. The number and the reason I want to go through the genesis of Project 1K Risk is because I didn't just throw out $1,000 and that was the risk I settled on. It was a combination of things and a couple different hoops I had to jump through in order to figure out what that number was. So before I get started, I'm just opening up my Gmail so I can show you some of the Excel sheets that I had going since March, and I'll put some charts on the screen. So the genesis of Project 1K Risk was derived from INO, which was a supernova stock that went crazy back in March. So on the screen right now that I'm pulling up, and I really don't know if we're even going to start here, but what we're pulling up right now is INO, and the time that I was developing Project 1K Risk was back here in March when it went supernova. On the right, you have the intraday chart for 1 day. And then I'm opening up my Gmail over here. And then at the end of this webinar, we're going to go through the plays of the day once we get through all this stuff, position management, risk management, and how I handle that, and how I handle moving up, sizing up. This is going to be a big conversation about how to size up, because sizing up isn't just, okay, I've been taking $5,000 positions and now I'm going to take a $20,000 position. That's not sizing up. That is gambling, and that is reckless gambling. So hopefully I can teach on this subject. That's my whole goal here today. So this all started with INO. I realized that on a setup that I loved a lot, okay, like we've been talking about for a majority of these weekly webinars, I love when stocks go red for the first time, and so what I have drawn on the screen for you guys today is INO back in March, when it had that multi-day run from 4 up to 19 and then had its first red day. And I always talk about how these are the aggressive shorts, but eventually you have that really nice panic red, it becomes that first red day, and then I look to short the bounce towards red-green. And what happened was oftentimes I was finding myself with smaller size than I wanted. This was a pattern that I'm very familiar with, that I'm very confident with. It's this entry right here that I see time in and time out again. And that's why I have so many charts open, because we're going to show you this pattern time in and time out again. Where I first started, not where I first started noticing it, where I first started getting really confident with it in terms of the coronavirus market that we've been seeing, it was because I saw it first with CODX, MRNA, and APT. So what I want to do is show you guys my Twitter real quick. So that's where this picture is going to change. This is just my Twitter. And just looking at the chart, this is CODX, okay, from when it had its supernova day, just very similar to INO. And you'll notice that it had this really nice panic. And what you're looking at is the red triangles are short orders and the green triangles are buys or covers. I would just ignore the top half of this portion, because what we're really focusing on is this area right here, where after it slams red and panics, that bounce up towards red-green is a short that I'm very familiar with. I understand what happens thereafter, and I'm very comfortable taking that position 9 times out of 10. So I did it here on CODX, okay? And then if I switch tabs, this is MRNA, again, another multi-day runner having its first red day. I was shorting it up here, but this is not the part I want to focus on. It's after it plunges red and has that nice bounce up to red-green. I like to short that red-green area and then cover the pull. And so I did it with CODX. I did it with MRNA. The last one I did it with, we're going to take this out of the way. The last one, so CODX and MRNA, that was February 27th. INO, which is the chart on your screen that you can barely see right now, this is March 9th. So this is about 2 weeks after MRNA and CODX. And I was really excited about this one because it was shaping up to look the exact same. Now there's one chart I want to show you before I go further. Because what ended up happening was with INO, when it spiked up to $13 from a low of 9, I put 300 shares in. A very small size for my account. And had I taken the loss, right, had this continued to spike through red-green, one of those anomaly type circumstances, with 300 shares at 13 bucks, like I was barely risking 600 bucks or whatever, which is really a small dollar amount to risk for me at my 5-year stage of trading and almost $500,000 in profits. So let me pull up the APT chart before I continue. So APT was the other one. Where is it? Where is it? It looks like I got rid of APT. So this is APT. And what I'm going to do is I'm going to change this chart to be APT on. So again, same pattern that I was just discussing. It's the multi-day runner going red for the first time. That's super extended. And what I'm going to do is on the chart on the right, I'm going to pull up February 28th. And this one's kind of important because as you'll see on APT, if I change the ticker, so I showed you CODX, I showed you MRNA, and here's APT. It's all the same pattern. Here's the green-red level, here's the green-red level. 2519, let's call it, okay? So it's a little bit here. So this is the genesis of most traders' issues, that the patterns aren't perfect. They're not an exact science. And yes, sometimes they poke through and fail. Sometimes they don't fail at all and they keep going. And so that's where a lot of traders get mixed up about what they're doing and whether they're doing it right or not. And that was getting me too. So the whole idea that green-red doesn't hold like perfectly every time, most of the time it actually does hold underneath that green-red level, that previous closing line. But there are circumstances that when they bounce, they do poke through green-red and either recover or still fall apart. And so when we get to INO, which is, again, 2 weeks in the future after CODX, MRNA, and APT, I'm shorting 13, and half the reason I only have 300 shares is because I expect this spike to, for whatever reason, go through green-red, the previous closing line. And in that case, I either want more shares or my risk is a little vague and I'm not going to cut the loss immediately. And if it does keep spiking without me and does something crazy like completely recovers, I stand to lose only 3 grand. Had 300 shares at 13 and it breaks at a 19, I'm still not even losing 3 grand. And that's a whole nother statistic up there. So I started messaging my trading accountability buddy and I said, hey, like, why the heck do I only have 300 shares in INO? Like, this is a setup that I know. This is a setup. This is the 4th time I've seen this setup in 2 weeks. And I nailed the other 3. So why don't I have increased confidence? Why is it, if anything, my confidence is less, my size is less, my risk is less? And the guy I was talking to just said, look, Huddie, you need to have a set risk that every time you see your bread and butter pattern, you get in with that size. And if you're wrong, you're okay taking that loss. And so he said that to me and I said, okay, great. I made up a number on the spot. I said, what is my set risk? What am I willing to lose on every single play that I'm wrong? And I came up with the number $2,000, okay? And I just pulled it out of my you-know-what. Without doing any idea, I just figured I'm okay losing $2,000. That makes, I can still sleep at night when I lose 2 grand a day. So let's do $2,000. So in this case, if I'm shorting, $13 and I'm risking $14.45, I'll have like 1,500 shares or whatever. A lot more than 300 is the whole point. And so I said to myself, $2,000 risk. the next thing that happened was my next learning curve. And the way I know how to go about this is because at one point, I started what I called a risk journal. And this is just some of the entries. So I had the ticker in here. I had how much did I risk. This is not how much I made. This is not how much I made or lost. This is just how much I was risking. Description of the loss, what I can learn, how I'll improve, and then what are my problems? Is it a problem with the setup? Is it an emotional fear of losing that took me out of the trade before it was actually broken? Was it undefined risk? And I held myself accountable, and I really started to dig into why I didn't have $1,000 risk. This is after, I mean, if you just look at the dates, this is after March, February, or I guess March 8th is when I decided to do Project 1K risk, and even into June, I'm still not even at $1,000 risk in some setups, and I don't. And the whole point of this spreadsheet was to hold myself accountable and to figure out what was exactly making me not put in the $1,000 of risk. And so I started learning things really quickly. In the beginning, the risk I had set up for myself was $2,000. I just kind of made, like I was saying, I just kind of made that number up on the spot. And I had to shift that real quick because something really bad happened. And let me show you the really badness that happened. Then came WTRH. Okay? And WTRH was a very unique situation. What I'm going to do is I'll pull up the chart from 3/19. So WTRH was a situation where you had this like insanely extended stock, and when stocks are really extended like that, you get some really nice risk reward. Where if you are able to nail the top and then kind of size into a winner, you stand to make a lot of money on these very extended stocks that are, you know, having that first really serious pullback after multi-days of extension. It's just the volume exhaustion, the sellers just piling on, and the buyers staying clear because the stock's at $4, and 3 weeks ago it was 30 cents. Or not 3 weeks ago, 3 days ago it was 30 cents, as you can see from the chart. Let's just zoom in on the area that matters. And so this isn't something I necessarily go out and teach because I don't have a set statistic or really a pattern to tell you guys how to short these things. I mean, I've seen some, you know, traders that you would think are really good that are just shorting the whole way up and just know that at some point today this could capitulate. And for me, that seems really risky. I understand that, you know, the more and more green days there are, that the less and less likely it's going to hold low day, and then you might have that really nasty red day. But it doesn't mean I'm just going to start shorting all the way up. So what I have to do is look for signs of topping action in this scenario, some kind of hard crack lower high. And this was right when I started Project, it was 2K risk. This was the first time I really had to implement Project 2K risk. And I said, hey, I'm going to nail the top of WTRH, and I'm going to have $2,000 risk to the high of day. And we gapped up massively, and I think we had this like little hiccup right here, and I started shorting. And again, I don't really have a pattern. I have a general understanding of what's going to happen in the day, but right now I'm giving into the FOMO. I'm giving into the emotion that I want part of this action, regardless of whether the chart's setting up correctly or not. I just know that at some point today it's going to be down, so I want to start shorting. And then it starts spiking against me. And I have 2K risk, but in that moment, what am I risking? And it was really hard for me in that moment to justify 2K risk. So what happened was that I took some sort of size, cut the loss, and it was over $1,000. And then I took another bit of size, and I cut the loss, and it was over $1,000. And all of a sudden, it was down $2,000 real quick. And it was probably a little bit more. And then we had this like hard crack, lower high, double top situation, and another lower high. And at that point, I felt like this is the first time a top was in. Unfortunately, in like real moments, I didn't know whether this was the top, this was the top, or this was the top. But once it kind of did this move, I was much more confident that we're actually topping out. And I know this about myself. And I know I give into this FOMO overtrading tendency when things are getting to stupid levels. And the best thing for me to do is to just avoid the situation and hit the first red day. But WTRH did seem really unique, and I did want to have position in this scenario. But what happened was I took a loss, and I was already down over $2,000. I'm already at my max loss, my max loss for the trade, and I still have to nail this thing. So then when it starts to spike up to 440 and actually double tops, I had a chance. I remember very specifically. I saw the bid at 430. I had 30,000 shares located, and I could have smacked 20,000 shares at 430, $2,000 risk to 440, and rid it down. The problem was, in the moment, the idea of putting on another $2,000 of risk after my first couple blunders, putting on another $2,000 would put me up to like 5-6K in losses within the first 15 minutes of market open. And that whole idea scared the crap out of me. It scared me. I didn't want to take another loss. This wasn't necessarily where I knew I wasn't going to take another loss. Nothing was for sure at this point. So the idea of taking another speculative position and taking another full-size loss made me very uneasy. And so I didn't take this short right here. I actually let it kind of unwind a little bit, and I think where I got in was right down here. That really, nasty unwind, and then a quick pop back up to 360. And then I said, okay, 360 to 440, I'll take $2,000 risk. And obviously, instead of 20,000 shares, I had, what was it, like 2,000 shares? 2,000, 3,000 shares maybe? So this made me realize that $2,000 risk was too much, because in the circumstances that I have to take paper cuts and get in and get out and get in and get out, which is going to happen from time to time, 2 or 3 or 4 losses in a row is really going to cripple me mentally. It's going to make me hesitate on my next trade or my next entry. So, and then I got to thinking, look, if I had $500 set risk in this moment, and instead of 20,000 shares, it was 5,000 shares at 430, maybe I would have actually been much more willing to take that third loss. But because it was 2,000, 2,000, 2,000 all within the first 15 minutes, the idea of the fourth loss or whatever it was very, very nerve-wracking, and it made me hesitate, it made me miss, and it made me miss the ideal risk-reward situation. And so what I did was I went back to my trades really. I went through Cobra, my broker, I went through Centerpoint, my other broker. I don't use Centerpoint anymore. And I looked up all my gains and losses. And I realized that, the bigger, like the outlier of losses for 2 years of trading are in the 2 to 4K area. Like, those are my biggest losses. I mean, obviously there's maybe like 1 or 2, 6 or 7, but for the most part, my losses are under $1,000. So I realized that my initial set risk dollar amount was, that I pulled out of my like I said in the beginning of this webinar, was a number that was actually far more than I'm used to losing. And the idea of that being my set risk, I figured was too much. So I put it down. I said, no more $2,000 risk. Let's take it in half. Let's take it to $1,000 risk. And in the circumstances that I have to take 2 or 3 paper cuts to nail this drastic move, I won't be wiped out. I'll still only have a $3,000, $1,000, $2,000 loss, and I can still play the game. It's when that loss is 10 grand and I still have to take another trade that I already feel like that day's ruined. So I brought my risk down to 1,000. And this is still what? March 19th that we're talking about? So over the next 3 months, I'm practicing with $1,000 risk. And it's not that $1,000 is like a lot for me to take. I just wanted to see what it was like to size into almost every trade with $1,000. And if I'm wrong, I'm wrong. And I take a $1,000 loss. And I started to learn a lot of things. The first thing it made me learn was it made me a lot more meticulous about my trades. I'm always asking myself if that trade itself was really worth $1,000. And it completely rid me of the monopoly-esque trading where sometimes you poke in and poke out because it might be fun or because you give into that temptation or for whatever it is. I could never do those monopoly pokes like I'm playing with Monopoly money because it's just a number on a screen. I had to completely rid myself of those trades because those weren't worth $1,000. And I knew them when I Monopoly poked them, but I still wanted to be a part of the action. And it's what actually curbed a lot of my over trading tendencies. That was the first thing I learned. Then the month continues and we're gonna get to our next chart, which is DECN. And the most awesome thing about all this is you can go back and rewatch the webinars. I've been giving webinars for all these trades. We've reviewed all of these trades live in the moment, and now we're gonna go over them again. So here's DECN, and this is an OTC listed stock, and the part that we're really going to focus on is over here when it was going supernova. And this idea was an OTC panic dip buy. Yes, it did have that same pattern I've been talking about where it panics red and then bounces up towards red green. And I did take this short, but that's not what I really want to talk about. What I really want to talk about was the OTC panic dip buy on this day. So where did this go down to? Was it this day? Wow. Hang on. Okay, so this was actually on the 19th. So it wasn't this day. Let's change this chart to 0319. Now, whether this is a perfect pattern or not, that's not the point I'm trying to make today. What Deccan was doing was it was going on its multi-day run. It was going red for the first time. So let's zoom into the chart that I just actually more clarified. This is what I'm actually looking at. This big red ugly day is what's on your chart to your right. Okay, and what I was trying to do with DECN was it was actually too cheap of a stock for me to short at this moment at 20 cents. So I didn't really want to take the short, despite it falling apart 50%. Maybe I should have. But what I did want to do was buy the OTC panic if it actually went far enough. And, you know, this breakout started at 13 cents and this panic went all the way down to 10, that round, that whole dollar, half dollar mark that OTCs really like to respond to at times. And I remember it very vividly. And this is the next thing I learned from Project Set 1K Risk. And it was in this moment, so I really want to zoom in. It was right here. DECN had panicked all the way to 10 cents. And in the moment, I really didn't want to trade because it was midday. You can see that the time frame right there is 12:15 to 12:30. So it was a midday panic. I didn't know how ideal the situation was. I didn't know if it was extended enough. I didn't know if there was going to be a great bounce. There was a lot of things that were weird about this OTC panic to me that I didn't necessarily want. And I saw it bottom at 10 and it bounced. And I still don't really want it because I think some other people bought it. I think like Tim Sykes bought it and a bunch of his guppies bought it. And I was just thinking, man, this midday panic is not what I really want to buy. So I let them all buy it and I just avoided it like the plague. And it bounced for a sec and then made a new low. And I want you guys to see these new lows. So the low of this minute was 10:01, right? This low was 10:01. And then this subsequent low, after everyone just sold out real quick, and the volume, you know, the volume is very important, right? And where we are in the chart, very important. So keep all this in mind, right? We're at support. So everyone starts to sell because Sykes gets out and everyone else gets out. And from 10:01, the next low was 0.97. So 0.3 of a penny. And I'm watching the level 2 in the moment and I see it hold. And I see 0.32 or 0.97 on the level 2, everything's stacked up. And we started pushing back towards 10. And I said, holy crap, that's the double bottom. That's the sign. And I started throwing in shares. And this was the next learning curve. I started throwing in 10,000 share orders. 10,000, 20,000, 30,000. And I got up to 30,000 shares long at 10 cents. And that is my issue. Because I had 30,000 shares with an average of 0.102. So this is 0.102. And what was my risk? Well, my risk had to be where I just saw it double bottom. And like for sure, if we lost that low again, I would just cut the loss. Because that means we're not going to hang on to 10 cents. And so I threw in 10,000 shares, and I threw another 10,000 shares, I threw in another 10,000 shares, and I stopped, meaning 30,000 shares. And I think I only got like 20,000 filled in the moment. The point I'm trying to make was my entry was 10.2, 0.102. And my risk was the low here, 0.097. That's half a penny of risk. And in order to have $1,000 risk with half a penny, that's 300,000 shares. I had 20,000 shares. 10,000 didn't get filled. So it's one thing if I didn't get filled because it's an OTC and there's delayed execution in the OTCs. But my issue is I wasn't even trying for $1,000 risk. I was going for, look, 30,000 shares at 10.2, risking half a penny is $150 if I'm wrong. So it's not even like I was even close to my $1,000 risk, right? I was just taking something I was comfortable with. And I realized that when the risk reward is so stupidly good, that I'm not even confident enough to even hit the trade like I should be hitting it. And it was eye-opening that what I was actually doing and why my size always remained small. I know how to trade, I know where I'm trading, but I was always not willing to take a loss for a variety of reasons that I was holding myself accountable to. And then I realized how far $1,000 risk gets you. If I had 300,000 shares at 10.2, if I had cut the loss for that half a penny, it would have been $1,000. On the flip side, this thing ran up to 16. And with 300,000 shares, that would have been a really, I mean, that would have, 9 times out of 10, if you just play out the odds, I'm going to end up on the right side of the trade. Just because you have good risk-reward ratios in a lot of these penny stocking framework patterns. So that was eye-opening. I realized that even if my risk-reward is perfect, I don't even take advantage of it. So I needed to condition myself. I needed to work on my golf swing. Because there was a mental block that I'm realizing. So that was DECN. What kind of sealed the confidence in me to move my risk up? So I'm noticing all these things and I'm working on them and I'm tracking them in that Excel sheet that I showed you guys. Hang on. Yeah. Okay. Sorry. Absolutely. So I'm tracking these things and hang on, I just need a sip of water. And proof of pudding was GNUS. That was really my test. So let's go to GNUS, which is again that same pattern, okay? That INO, APT, CODX, MRNA, whatever you want to call it. It's that multi-day runner having that first really red ugly day. And there are a couple things going through my mind. I'm thinking, okay, if this does unravel, you guys are good. If this does unravel, hang on, let me draw the lines. So genus, we're going to get the previous closing line, which is going to be the top of this candle, $8. And then I'm going to change the chart on the right to 6/04. And before I even do this, there's two things going through my mind on this day. Okay, this is why I've moved up my risk, because I feel like I've graduated Project 1K risk. So before I even pull up the chart, GNUS, just looking at this one on the left, this is the WTRH situation where it's a very special extended, like just a stupidly extended stock. This thing was 40 cents 3 weeks ago, and now it's up at 12. And the last 4 days were the multi-day run, and just it's that more and more green days. Eventually, you're going to have that really red ugly day. So what can we imagine is going to happen? Okay, there's going to be a very nice risk-reward situation near the top. That's not going to really be a pattern, but if you can nail the risk-reward, you have a really nice drop to take advantage of. And if you take a couple paper cuts, it should be fine at the end of the panic if you actually are focusing on the right day and have that ability for the stock to actually panic. Taking a few paper cuts, 10, 20, 30 cents once, twice, 3 times is nothing compared to the time that it goes from 12 all the way to 4 in 30 minutes. So what we can imagine is going to be is that really nice panic, like WTRH, and then like MRNA, like CODX, like APT, like all the stocks we went over in the beginning, there's going to be that really nice bounce off the lows and right into green red, and that's the pattern that I'm very familiar with. So let's look at GNUS. $8 is the green red level. The top of the spike is going to be green red, and just like APT, I'm going to take off pre-market. Just like APT, this one pokes through a little bit and then still gets rejected and comes down. So when I'm going into GNUS, I knew the situation and I told myself, look, this is a great setup. Let's get $1,000 risk, okay? And even more importantly, even better, when it started spiking up like here, I said, look, I told myself on my watch list in the morning, I said, look, you're going to take paper cuts. I know you. Like, I'm talking to myself. It's crazy. I'm in my head. I'm like, I know myself. I know exactly what I do. I'm going to see these little red candles and start taking stupid entries. And I'm going to take losses. So, especially in the beginning of the run, $500 risk. Like, the pattern that I'm very familiar with, that I saw time in and time out again, and I always made money on, was right here. Okay, so when it's up in this area, maybe that's not worth $1,000 risk, because that's not my bread and butter. This is my bread and butter. But I still do want to be able to nail some of what this opportunity is. I mean, this is an amazing opportunity, and I want to have position for some of it. So again, I'm not really teaching this to teach you guys how to nail these, because I do think if you're a beginner short seller, you're going to get blown out of the water trying to do this stuff. It's the first reg day pattern that I find a lot of statistical importance with, and that's not till later in the pattern. So what we're really focusing on right now is how I manage the position, how I manage risk, and how I kept this set $1,000 risk. And so the day opens and it starts spiking, and I remember very vividly, I took a couple losses. By the time it had hit 1150, I was down 1,500. And being down 1,500 didn't put me out. That means I took 3 losses. And all 3 were paper cuts. And I knew I still needed to stay focused, stay vigilant, because I knew I was doing my stupid stuff. And once I see the hard crack lower high, like the topping action, I'm going to see it, and this time I'm going to get in. Instead of WTRH, where I froze in the moment because I already had significant losses. So just putting the lower high, and right here at 1135, I took 800 shares. I think my entry was 1120. And 800 shares, 1120 was my entry. I know that, I just remember. And the high of day was 1173. So let's say I'm risking 50 cents on 800 shares. So that's the $500 risk, give or take. And now it's not $500 because you can imagine I already took 3 losses. I'm already down 1,500. And I know that this spike goes through 1170. I'm just going to smack out into strength immediately. And there's probably going to be slippage to 12. So I'm just accounting for, I could have had 1,000 shares in there, but instead I went lighter. And that's fine with me, because this was the part of the pattern that I know I take losses. So I took 800 shares there, and then we had this crack right here, and that was actually them registering shares with an S3. They put out a shelf registration for shares on an S3, and that it was just bad news. Like, we all knew it was coming, we didn't know when it was coming, and then it came. And they basically, I think I pulled up for a second, and it's an S3 in their filings, and they just registered a bunch of shares at $2, and the stock's at 12. So that kind of news, whether it's a conference call or a shelf registration, an offering, certain things like that are just going to pop the momentum, and everyone's going to start freaking selling. And I had that suspicion once I saw what the news was. So I had 800 shares at 1120. It halted down, so I had a minute to think about it, and I knew I wasn't even at my full $1,000 risk at that point. I knew that I had $500 risk, and if anything, lower. So I could take this opportunity to add some shares, still have my risk at high of day, and get up to that $1,000 risk. So this popped up into 1030, and it really wasn't about entry. It wasn't about nailing what the top of this little pop was. It was just about saying, hey, I need $1,000 risk so that if it does break high of day, I take a $1,000 loss again. And so I think I added 600 shares here. Of course I wanted to add a bunch more. I had a very strong suspicion what was about to come. But I needed to stay true to my discipline and what I was practicing. So I wound up with 1,400 shares at $10.80. That was my average. And the risk was 1080 to 1170. 1,400 shares, it would have been a $1,400 loss. A very unique scenario. A very special scenario. So the fact that I even granted myself $400 more of loss is actually kind of warranted, especially as I'm adding to a winner. And I knew that finally, there was a lot of certain things that came out all at once that made me very confident in this play and said, hey, I need to get in now. This is it. Pattern-wise, filing-wise, day of extension-wise, there's a lot of reasons to get in. So I got 1,400 shares, and again, of course I wanted a lot more on this pop, but I had to stay true to what I was practicing, because only then can I slowly crawl to my new areas. Because when you start doing this too fast, you take that loss, and that loss is going to hurt you. And it's something that almost every trader has to go through. And this was the stuff that no one ever taught me. So what I used to do is when I used to see this kind of action, I would say, frick, this is like the best play in the world. I need 10,000 shares at 10 bucks or whatever the number is. I would throw out a number and I would get in with how I felt about the trade and take the loss that I felt was a good loss to take on a unique situation. And that whole perspective and paradigm has changed in me. So I had 1,400 shares from 1080 and then boom, down to 4. Cover. Whatever the money was whatever the money was. Then we had the next part of the pattern, which is the part of the pattern that I'm very familiar with, that I know that you get that nice bounce up towards green red, and it usually rejects. And I can take advantage of either the pullback or the fact that oftentimes first red days go into second red days, and maybe I can get a cover towards 5, which is the low of the next day. So, and I also realized from what we've been looking at, from what we've been discussing, that I had worries about this green-red level, that I always thought it was going to poke through, and then, you know, I'd have vague risk in mind, and that would make me take smaller size. So instead of shorting the way up, I let this halt into green-red, and then smacked back down. You can see it touched green-red, went above by 30 cents, and then smacked all the way down to $6.50, so $1.50. Doesn't look that much on the chart, but that's a pretty good drop in, you know, a minute or two. And so at that point I said, wow, that bounce to green red, that part of the pattern has completed. And what I can expect next is slow choppy fade and then likely a first red day the next day. So I started sizing in down here. And what I started doing was saying, hey, this is the part of the pattern I know. This is the bounce, the rejection, and now we have hard crack, lower high type price action. So what I wanted to do was I wanted to get $1,000 risk, not up to 1170, but now I wanted the green red risk because this is my first red day type pattern. So now I want to risk the area that I see more often than not hold, which is that $8 area. And I already made such a nice profit that I was willing to, and this was the part I'm more familiar with, that I was actually willing to have more than $1,000 risk. I was willing to have, I forget the number. And I can tell you guys what, the entry wasn't even great. The entry was 712. That's what I can remember. 712, 713 when all was said and done. And I might have like 4,000 or 5,000 shares, like a good decent amount. A little bit more than my $1,000 risk had I taken the loss, but I'm also playing with a little bit of house money in this circumstance. So, you know, in theory, whatever I made on this, I could risk all of those profits plus $1,000 and I'd have my $1,000 risk. Now, I didn't do that because that would just mentally destroy me, but maybe that's something to think about in the future. But I had like 4,000 shares, I want to say, from like 713, 730 maybe. And I was risking 830. And this was all the proof of the Project 1K risk coming together. Like I did the top so well, and then I was patient, and I let it crack, and then I started building into an ideal $1,000 risk scenario. I know I'm saying, what I'm saying is more than $1,000 risk, but it's circumstantial at this point on June 4th, from based off what I've been seeing for the past 3 months. And so I just handled this really well. And I ended up covering Genus down here at 6, in the 6s. I was able to add on another $2,000 to $3,000 to the play or whatever it was. And that was kind of like, okay, Huddie, you really did well with $1,000 risk in a situation where I'm going to be antsy, I'm going to be FOMO, I'm going to have all these reasons to want to get in with size. And instead, I controlled everything about the trade. And that felt really good. And then, I guess what helped was nailing all of the oil plays, making $75,000 last week. That was a huge thing. I made $75,000 in 7 days, and that was with $1,000 risk. Okay? So, if you're ever risking more than $1,000, like, let that be a reality check. How much money do you really need to risk to make some extraordinary gains? The reason I'm going over position management and risk management is because it's really shifted my perspective. I've taken really big losses, and I've never made $75,000 in a week. Now I'm taking the smallest losses I've ever taken, and I'm making more money than I ever have. Think about that. That's why I want to show you guys this. I think oftentimes people are so giddy to get their full account size into a trade and make 20% on their full account size. when really you shouldn't be thinking about the total equity you put into a trade. It's what are you risking? So then Genus came around, and there was also Hertz. And Hertz I kind of sized up a bit too, because this was a very unique play that we discussed. The bankruptcy play doing the overextended gap down. I felt really confident about a bankruptcy doing the overextended gap down. So I allocated like 4K of risk here on Hertz. And then I did really well with Hertz. I think I made like, when all said and done, like $20,000 on Hertz, $25,000 alone in this week. And this was again, right when Genus was happening. This was like proof that I'm trading well. So what happens next? So then a couple people yell at me and they say that, like, you know, you need to trade with some size, and I'm thinking, okay, I can handle 1,500, I can handle 3 grand, I could probably handle a 10 grand loss, but I can't just throw out a number again, because again, there's always that situation where I might take 1, 2, 3 losses in a row. And if I have like $5,000 or $10,000 risk, you know, if I down 40K, let's just say an extreme situation, if I'm having $10,000 set risk, and I take 4 losses in a row, whether they're paper cuts or 1 day, 2 days, 3 days, 4 days, that's going to mentally mess me up. And I'm not ready for that. And I feel like the jump from even 1K risk to 3K risk is a lot. I think the jump from 1K risk to 2K risk is a lot. Like, that's doubling your size in theory. But it's the number I settled on. I settled on $2,000 risk because I have taken some $1,500 positions as we progressed since March. And I think I am ready for $2,000 risk. So that leads me to today's trades. IPIX. IPIX. So now let's get into some short selling stuff. So as always, we have our multi-day runner, our nice extended multi-day runner on the OTC market. Phenomenal OTC breakout buy. Okay, you have this really nice volume candle of 26 million shares, the most volume it's ever traded. It consolidates for literally 2 months and breaks out on very similar volume. And they had a PR, I think. Phenomenal. I missed the breakout. I don't nail them all. I think I was actually filming with someone and I couldn't even trade that day. I would have bought this breakout though. It's really nice. And then it gaps up the next day and goes even further. And now we're getting to the point where it's getting to be that multi-day runner extended. And so I'm going to start looking for a short on it. And coming into today, I didn't know if I really wanted to short it. I really didn't know what was going through my mind. But hopefully you guys have watched the chapter on OTC short setups, like I mentioned way back in the beginning of these webinars. And the OTC short setup says there's 2 things, and it's kind of what we've been talking about. You can short the red-green move. Down here, this is red-green, the dotted line, previous day's closing line, as we always talk about. Or there's also the short into resistance idea, where the stock spikes really nicely into where potential backholders are. The backholders overwhelm the buyers in the moment because the stock is extended, and then you have this panic, and then maybe it goes green-red, and you have a nice gain to capitalize on. There's 2 ways to go about it. What you have to be careful though is if this does gap up and start spiking towards 55 cents, it could break out. Like, this is not a first red day. This is kind of a gamble situation. Like, it's extended. The more and more extended a stock is, the more and more odds are in the favor of the short sellers. But of course, on an OTC, if this had broken down to 55 cents and a ton of volume started rushing in, the ask could have locked up and you could have been stuck in your position, which is something to always be aware of. And that was certainly what I was aware of. So coming into today was the first day I was practicing 2K risk. Okay? And I'll show you how I handled the trade. Because I kind of did it well, I kind of did it poorly. Let's get into the entries and exits. So remember, the red triangles are me shorting, the green triangles are covering. So this started spiking up, and I did that stupid thing I always do when it's not red on the day. I did that thing where I just short, like randomly, like it's spiking up towards 50 cents, and I just won a position because I think 50 cents is going to reject. And had that been my full position, that would have been really bad. I would have been very uneasy about the trade. I wouldn't have been able to add up here if I had taken the loss. Oh my God. So again, I don't really like to teach about shorting into resistance because I'm not the best at it. I'm not great at it. You know, oftentimes I end up with that short when it's on the red day. But this was a situation where I was just following the level 2. This was a very small size. It got up to 53 cents. I saw the level 2 turn. I knew my 55-cent area was up there. And so I immediately located 25,000 shares. And I said, this is like my aggressive entry. And if it goes red, maybe there's another option for me to really add in and get $2,000 risk to 55 cents. So I took 25,000 shares, and this wasn't the most ideal situation for me, although I have some kind of predictive power as to what's to come. This is a situation that I'm very familiar with. It's just not always me hitting this area of the pattern. In this circumstance, though, just the way that it was spiking, the way that level 2 was working, I felt like I had a good control in the price action, and when it started turning, that's when I actually slammed in. This was 5,000 shares, you can see. It says size 3,000 shares or whatever. Oh. And then this is where I actually added some size. And my average was 51 cents. I had 25,000 shares and 51 cents. And had I been doing the risk journal, this would go into it. Because in reality, at 53 cents, with 2 cents of risk to 55, that should be 100,000 shares. That's that really good risk-reward situation. And for a multitude of reasons, and mainly because this isn't my bread and butter, but it's close to it, I didn't have 100,000 shares, but maybe I should have 50,000 shares at least. And I had 25,000 at 51 cents. And then it came back down, and what I immediately did was I took off the early ad. I took those off for a profit. And so that was really nice. And I was just kind of coasting on 14,000 shares, and it started to just be really weak. It seemed like every time it popped, it was just getting sold into really heavily. And then it started breaking the lows, and I figured, okay, this thing is going red on the day. And that is my area to short. That is what I like to do in the OTC short setup. I like to short the red-green move. They're not always going to kind of be this kind of price action. I don't love shorting the weakness like this because oftentimes it's going to panic and then bounce right back. But this looked as good as dead in my mind in the moment. So I just added what these covers were back on, and I got myself back up to 25,000 shares. And it was 25,000 shares from a 48-cent average, maybe even 49. And so this was my full position. And again, I wasn't happy with it because if I have 25,000 shares at 48 cents and I take the loss to 55, it's a little bit less than 2 grand, but it's actually give or take right there. So I feel like I actually did a pretty good job with this now that I'm reviewing it. At the end of the day, after all the ads and the covers and whatever, I had 25,000 shares short, and the average was 48 cents, and had this gathered and then spiked, had this gone from red and then gathered and spiked through 55 cents. 25,000 shares from 48 to 55 would have been a little bit less than 2 grand, but you have to account for slippage, especially on the OTCs. When that ask block's out, sometimes you gotta fight to get out. And so maybe I didn't get a perfect cover. I wouldn't have gotten a perfect cover at 55. Maybe it would have been 56, 57, 58, whatever. The whole point was I actually did have $2,000 risk there. And it paid really well. You can see just my covers later on. I covered dead bottom because the level 2 started turning. And that was half, and then it was just kind of holding up here. So I just, I figured from 54 down to 37, and the thing freaking started at 20. That's as much as the range as the stock had. So I just covered it up once it started basing and forming that higher low. And it was really nice. I think I made $3,000 on the trade when all is said and done. Maybe even a little bit more. I don't know. I don't actually look. But it was super solid. And then so I was like, great, $2,000 risk. Oh boy, the rest of the day, there's trades going on. I like some, I don't like others. We can go over a couple that I kind of liked and I kind of didn't like. CODX is super interesting to me because this is a breakout chart. If I go back to that area right there, we just broke out pretty obviously. The problem with CODX was the market cap. It's 500 mil. And again, that's out of my familiarity zone. I like to buy breakouts and afternoon high day breaks when they're under 100 mil market cap. This is 5 times that. And it could do the INO thing, but it's just not a trade that I need to be a part of. So I ignored CLDX. Let's just talk about the one that I did end up getting in. It's not Vizzle. It's VYST. VYST, very simple idea. The hard part is sizing in. This is a FOMO runner. You can see back in January 2019, it went from 6 cents all the way up to 16, right? So FOMO runner loves to go on multi-day runs, et cetera, et cetera, et cetera. And the resistance that really matters is going to be up here at 15. And even if it's not there at 15, then it's up here at 9. And 9 is very far away from 3. So I do think if we zoom in on the action, you know, none of this volume, hang on, none of this volume concerns me, right? This whole area, there's no volume being traded. So I'm not looking for breakouts, I'm not looking for anything. But then what happened a couple months ago, back in May, they put out a PR, and I think it was a coronavirus PR. And they got it spiking really nicely, and they put on a top at 3 cents, and it held for a couple days, and it downtrended, and then we built back up. And we broke out today. And it was terrifying. Because I'm always been nervous with my longs. Like I've always had an itchy trigger finger. I've always not wanted to stick to the risk that mattered. But VYST actually shaped up in a very nice way where it's like, even if I'm wrong, I'll take that loss every time, because the risk reward, okay, how this placed it up was absolutely beautiful in my mind. It's an OTC multi-day breakout, massive volume being traded. I mean, just look at the volume. We're eclipsing that volume of 132 million, just like IPIX, right? We have the former runner credential. We have the idea that maybe they can PR on Monday because they're pumpers. They know how to pump. Maybe they PR on Monday and get this thing to gap up and then really start to spike. What I really liked about it was it took the whole day for it to break out. Like, all of this. Hang on. All of this I would consider consolidation. Everyone always is like, okay, hang on. Let me get back to my thing. Everyone's always like, hey, Huddie, is this the consolidation? And I'm like, yeah, that's obviously consolidation. But this is all consolidation. This is the whole day move where, you know, it spiked, it consolidated, it broke out, it spiked again, it consolidated, now it's breaking out again. So it's got a whole day's worth of consolidation. You have the, where is it? You have the breakout level right here at 3 cents. And basically what I did was I let this thing consolidate for as long as it could, because I felt like the more and more consolidated, the more and more it created support, the tighter and tighter my risk reward became once it eventually broke out. And so what happened in this scenario was, if it had like broken out on this like move up, right? If this had gone all the way and broken out of 3 immediately, A, I probably wouldn't have bought it because it's a straight up spike. And B, where's my risk? Well, none of this really consolidated very well, right? So if this move at 1 o'clock had all the way gone up to 3 cents and then broke out and ran to 4, and I had to buy 3 cents, the only area I could risk was down here in the low 2s. And that's like 30%, like 3 cents down to 2 cents is 30%. So I'm risking 30%. So how do I have $2,000 risk? Well, that's 200,000 shares on like a penny, right? And that's not going to get me very far if this runs to 4 and then starts to, you know, get knocked back because it didn't consolidate very well and everyone just starts to sell. So this is what I mean by the risk reward. If you allow them to consolidate, it gets even better. And so I'm watching it into this moment, and the top was 279 and the top here was 278. And I know the breakout's right here at 294. So they're pretty close together in the sense that I know if one breaks, the other one might break, right? Because they're like 5% away from each other. And I know that the longer it consolidates here, the more that prophecy will become true. So I'm looking at this better risk reward situation and a better type of breakout. And so as it starts consolidating and starts testing up here at 2 o'clock, I'm now thinking that this is my support zone because 2-3 held for a second. That was the top over here. And I still didn't even love that risk because I feel like, I don't know, I didn't love that risk. I feel like that was still pretty wide. I feel like even at 2-3, I still only wanted 200,000 shares because, again, because of slippage, I would have lost. Just about 2,000, maybe a little less, and maybe I didn't want to give up my profits on the day from IPIX. And then we consolidate more and more and more and more and more until the last hour of the day. And at that point, that was my consolidation. And this, 1 test, 2 tests, 3, 4, 5, 6, whatever you want to call it, this hugged 2-6 for an hour. And I figured, look, if this thing breaks out of 2.8, it should break 3, and if it breaks 3 and they can break high of day, then they might actually gap it. And so if all of that doesn't happen and instead it breaks and then comes back down and goes below 2.6 and starts going to 2.5, I'm just going to cut the trade. And so I'm risking half a penny, right? And maybe it's not the perfect risk to use, but it kind of made sense to me in the moment based off how this chart's set up. It just felt like a really opportunistic risk-reward situation. So it broke out of 2.8, and my risk was 2.6, maybe 2.5 with slippage. So I threw in 400,000 shares, and it's probably, in terms of share amount, the biggest share count I've ever had in a stock. I threw in 400,000 shares at 2.8, and then the next 45 minutes were very stressful, because it was like, especially this dip right here, because I was like, God, if this just makes me like stop out because of another tenth of a penny drop, and I stop out at all 400,000 shares and they catch it and rip it, I'm gonna be so upset, you know? So this part was really stressful, but you know, I just kind of trusted the risk. I was like, look, like you know, what else can I do at this circumstance with this amount of shares? Had I had any less shares, I probably would have given it more wiggle room than 2.6, and that's probably not the right thing to do. If it starts failing into close, I probably just want to be out. But the idea of getting rid of such a big size, like bigger size than normal, is always nerve-wracking, which is why I had to do Project 1K risk for so long to get to this point. We're now 400,000 shares at 2.8, 2.9, which is still a little bit on the light side. I actually contemplated another 100,000 shares right here, but I just felt, I was a little nervous, definitely. And we'll see how this one works out. We'll see. It closed really well. It's literally closed perfect. You know, and tomorrow I can imagine it gapping up and going, and we'll see where the level 2 turns and where I start selling. So let me wrap this webinar up. There's a couple things I've learned from Project 1K Risk that I really want to emphasize. The first thing I talked about earlier was the meticulousness, the getting rid of the monopoly-esque pokes, asking myself if this trade is really worth $1,000. And then now the question is it worth $2,000? I've moved. Number 2, patience with entry. And this goes right back to VYST. I figure the more and more I wait, the bigger and bigger my size can potentially be. My risk is not changing, but the total amount of money I can put into a stock will change based off the risk-reward scenario. How many shares do I need to lose that $1,000 or $2,000 risk? It doesn't matter the total equity I put into the stock, as long as I have enough money to cover it and I'm not being reckless about it. Obviously, I wouldn't recommend anyone. I would never do it for myself. I would never just put my whole account size into a stock because that's $1,000 risk. And then, honestly, that would be like I'm risking a tenth of a penny and I have 1 million shares of an expensive stock. And that's never really the case. I'm never risking a tenth of a penny. So it's never a matter of too much money in the stock when I'm dealing with $1,000 risk for my account size. And so I figure out the more and more patient I can be, potentially the bigger my entry can become. And that's so well illuminated in VYST, where I was just patient. I was patient. And then when it broke, I was like, fine, 2.6 is my risk, not 2.5, not 2.3, not 2 at the beginning of the day. It was very, very tight. And that's because I was waiting and I was patient, because I knew if I had $1,000 risk or $2,000 risk and I had very wide risk, you know, down to 2, down to the low, the play wouldn't be worth it. It'd be 1-to-1 risk reward. I would never mathematically come out on top profitable. I talked about this a little bit as well, the paradigm shift in my trading perspective. My biggest losses like a year ago were in the 5 to 10K range. And that blows my mind, because I can't ever imagine myself taking $5,000 to $10,000 loss. Like, that was one trade I would take a 5 to 10K loss on. And now it seems so difficult for me to even take a 5K loss, let alone a 10K loss. I mean, that would be either multiple setups in a day and or like a lot of paper cuts to get there. Now that number will change now I'm at $2,000 risk, but with $1,000 risk, I was nowhere near my biggest losses for 3 months straight, 4 months of arguably the most volatile market and where I could be taking very big losses. They were very controlled. It was very easy trading. I slept that night. You know, I never had a big loss this whole time. And then I wrote still a couple times where I risked less than $1,000. it blows my mind. What also blows my mind is with $1,000 risk, like I could stay here forever. I could stay so comfortable with $1,000 risk. And I wrote this a while ago, but like again, I made $75,000 in a week with give or take $1,000 risk. And I guess it was a little more because of Hertz and Genus, and I guess I was long multiple oil stocks overnight. But the idea of what $2,000 risk can buy me is just mind blowing. And the fact that I risked $5,000 to make $1,000 or whatever, or to the fact that I risked $5,000 and I didn't make, I didn't even come close to making $60,000. It blows my mind, right? Because I think I can make $60,000 with just $1,000 or $2,000 risk. And that was, again, I used to size into a trade based on how I felt about the trade. And I knew the dollar risk I was going to lose in the moment. I just figured, like, okay, perfect setup, so I need size. And in those circumstances, when I did take losses, those hurt, and those knocked me back a couple weeks. And that does not happen anymore. It was huge. And that's pretty much my whole spiel on position management and sizing into risk. And as we progress, maybe we can talk more about it, because I have been thinking about ways to, like, when you have a situation where you've already made money on the stock, maybe you're up $2,000 on the stock, and then there's another because when things often go backside in the first red day of a very extended stock, there's multiple entries. We talk about that a lot. And so maybe you hit an entry earlier and you covered because the gains were good and you knew it was going to bounce and you knew you were going to have another entry. And so maybe you're already up $2,000. And when it gets back up to that other ideal shorting circumstance, well, there's always the idea where if you still want $1,000 risk, you can take the $2,000 you made from the first entry, add another $1,000, and say, hey, from this entry I'm going to have $3,000 risk, because this is the circumstance that I'm very confident in. And then if you take that loss with $3,000 of risk, you'll lose the $2,000 of profits from the morning from the first entry, and then you'll lose an extra $1,000 because of your $1,000 risk. So at the end of the day, you will lose $1,000. But if you're right, in that circumstance, you just added to a winner and then rode down a bigger position with more conviction towards the lows and cherry on top type situation. That's something that I'm excited to do, but that's not something I've really done yet. It's called layering in, folding into your position. And what I just honestly do is just stay with $1,000 risk. Very disciplined to that for 4 months. And it's really moved mountains in my trading. And I hope this webinar, this video lesson did something for you. $1,000 risk is my level. That's what I got to after 5 years of trading. So don't just say, how do you set $1,000 risk? So I need $1,000 risk. You can do the same thing with $100 risk. You can do the same thing with $10 risk, right? Experiment. Find that level that's good for you. It was a progression for me to get to $1,000 risk. It wasn't just overnight that I figured out $1,000. I started off way higher than I needed to be. That's because I was thinking profit first, risk later. Always think risk first, profit later. That's going to be it for me, guys. I got to get going. Have a great rest of your days.